We are here to talk about Venezuela's economic outlook in 2014. We have a number of people on webcast as well, so I want to welcome you. Anyone who's tweeting it, actually. Our hashtag for this event is @VZOutlook, so feel free to tweet using that hashtag. And also, for those watching on webcast, you can submit questions via Twitter directly to us, and we will answer them in the larger question and answer period. First of all, I want to welcome our panelists. We have a great panel here to discuss Venezuela's economic outlook, and we have Alejandro Arreaza he's the Latin American economist of Barclays. We also have Freedman of Moody's. He's a senior economist for Moody's, vice president, senior credit officer for Moody's, and then Francisco Rodríguez, who's the director and a senior Andean economist at the Bank of America. And obviously, the timing couldn't be better or worse. It depends on how you look at it. Tonight, we're going to discuss the questions of Venezuela's declining reserves, the rise of public debt, with inflation now reaching around over 50%, economic growth declining still, and of course, the question of the overvalued currency and the complications in exchange rates. I'd like to say we're going to talk about the 4 Ds, devaluation, default, debt, and doomsday. Will this actually come to a point when Venezuela will collapse, or can it pull out at the last minute and prevent a complete collapse? So what we'll do is, for the next hour or so, we're going to be engaging in sort of an informal discussion, and then after a little less than an hour, I'll jump in and have you guys ask questions of the panel we have. And I haven't really prepared any specific questions for any specific panelists here, but I want to sort of just present them generally. So the first one is basically, how long can this exchange rate regime last? Overvalued, multi-tiered, clearly causing complications for investors, clearly causing complications for the supply of goods in the stores. What's going to happen? Alejandro, we'll start with you.
Yeah, so I think so. The situation in Venezuela is that we have a significant inconsistency between the fiscal policy and the exchange policy. You know, the government has been trying to maintain a relatively strong or quasi-fixed exchange rate while they implement a very expansionary fiscal policy, you know, that has driven the public sector to register double digits in terms of GDP deficit over the last 4 years, and probably this will be the 5th consecutive year in which Venezuela registers a public sector deficit above 10% of GDP. That in practical terms means that Venezuela is expending 50% more than what it is receiving. You know? So that's clearly a situation that cannot be sustained in the long term. You know? This year we had some kind of devaluation when the government, they did not adjust the official exchange rate, but they decided to move some sectors to the SICAD system, that is the second market that Venezuela is managing. However, still, this is an insufficient adjustment for the magnitude of the distortion that we are talking about. You know, this, depending on how the government ends up implementing these transferences of sector from CADIVI to SICAD, the government might collect 2-3% of GDP in additional revenue, but still it's nothing compared to a deficit of 14-15% of GDP. You know? So there is still a possibility that they could open a legal parallel market, but the government has been talking about this for almost a year and nothing has been done yet. You know? So, and the options that apparently are on the table all talk about a market that will be restricted, where it is not clear if the price will be set by supply and demand. And as long as those conditions remain there, so you will have all the incentive for over-invoicing of imports, corruption, and all these factors are the ones that, at the end of the day, have been affecting the external asset position of Venezuela that has lost more than $20 billion over the last 2 years.
Aaron, how's Moody's looking at this and the overall
I think that it's a very difficult, if not impossible, question to answer, frankly, because of the lack of transparency that you have in Venezuela. We know how much they have in terms of international reserves. Most of it's gold. There's a very limited amount that's foreign currency. But then they have this amount of other supposedly liquid external financial assets the public sector holds, but exactly how much it is, exactly what it's invested in, how liquid it is, what it might be committed to, how much the government might be able to use just to keep the wheels of the economy rolling is I think a big question mark. So given that, you know, you really can't say how quickly those reserves or other assets, the pace at which they have been declining over recent years, and to what extent that may be accelerating or not, I think is very difficult to measure. The other thing is that they have various mechanisms available to them, which they could resort to potentially to try and prolong the current situation, assuming that they don't want to make any radical changes, which certainly appears that they're not really very interested in doing at this point. You know, first and foremost of those is borrowing. As long as they can continue to borrow more money, as long as there are people willing to give them money, the government can keep this thing moving along. Now, the cost of that money seems to be getting increasingly dear. And at a certain point, it may become so expensive that the government will reassess whether or not it's still interested in doing that. And in fact, last year, there was very little external borrowing, certainly much less than what we had expected. It was essentially just loans from the Chinese, and then some of the major oil companies provided some secured loans to PDVSA, but there was no external government bond issuance, and the only PDVSA issuance was basically allocated to public sector, to the central bank and so forth, and then I guess made available through the SICAD system. So we didn't see that issuance last year, and that may be because the government has already come to that conclusion that this is too expensive, that they don't want to do this. And so then that could significantly limit their options, particularly if the Chinese decide, if they start to get skittish and they decide they don't want to throw any more good money after bad.
Just a quick follow-up on that. What effect has the skittishness now with investors in Turkey, Brazil, Argentina? What effect has that had on Venezuela in the last week or so?
I mean, Venezuela's debt was already trading at extremely high yields, so
couldn't get much worse.
I would say that's from an external perspective. I would say it's hard to get much worse. Now, from their perspective, perhaps they don't see it exactly the same way. There's lots of things they don't see exactly the same way.
Francisco, we're talking about a lot. One of the things I want to get back to is when months ago, people, including some sectors of the opposition, were saying the government couldn't, it was about to go broke, it didn't have enough reserves. You were one of the few people that said no. Yet another example sometimes of some elements of hyperbole within the opposition. Yeah. Give me a sense of is there anything different now than before in terms of the devaluation, right. If, when?
No, I think that the risks of default in the Venezuelan case are clearly exaggerated. I think that there's a perception that Venezuela has run out of money, which is actually quite difficult to square up with what we know of the data. I mean, let's suppose that we center just on the central bank reserves that are there, just the ones that we can see. $21 billion, that's 3 months of imports. That might sound like a low number. Well, the Latin American average is 4 months of imports, actually. So this is higher than about 30% of countries in the world, yet Venezuela has yields which are much higher than those of all of those countries. And that's if we assume that the money from the off-budget funds is not there. If the money from the off-budget funds, there is a central bank data on it that's published from the Net International Investment Position Statistics. I mean, one might question the quality of the data. I actually think it's reasonably good data, and in the attempts that we've made to try to replicate that data using inflows and outflows into those funds, we've actually been able to replicate it quite well. And that would put you at 5.9 months of imports, which is actually higher than that of 78% of countries in the world. Even if you thought that none of that is there, you still have a sizable amount of assets abroad, such as companies like Citgo. I mean, a lot of things that in principle Venezuela could sell if it was really in the midst of a liquidity problem. So I think that that it's very hard for me to square the data that we know with the idea that Venezuela has run out of money. I think that what we're seeing is something else, something completely different. I think that what we're seeing is a hugely misaligned exchange rate. And this hugely misaligned exchange rate creates a lot of scarcity for obvious reasons, because a misaligned exchange rate essentially means that the government is selling dollars too cheap. I've never before ever seen or heard of, and maybe one of you guys has, of a black market premium of 1,200%. But I mean, this is literally like you have a central bank that put a sign on its front door saying, we sell $10 bills for $1, or actually for 80 cents now. And obviously, everybody's going to want to get these dollars. And that's essentially what's happening in Venezuela. When the government itself admits that 30 to 40% of imports, of food imports, are going across the border into Colombia, when you have these levels of over-invoicing of imports, which are essentially massive, when the average Venezuelan spends more time thinking about what it is that they have to do to get the Cadivi dollars to travel abroad rather than what it is that they're going to do at work, because the allowance for traveling abroad is actually worth 3 years of a minimum wage. So all of these are distortions which at the level of pricing are just huge. And of course they generate a set of incentives that just make the economy not work. But interestingly, in this whole process, what that is not leading to is a depletion in reserves. If you look at what's happened this year in the international reserves of the central bank, you actually find that once you factor out the decline in the price of gold, which has been sizable because Venezuela has 72% of its reserves in gold, and the price of gold last year fell by almost 30%. Once you factor that out, actually these reserves are quite stable. And I think that that's a reflection of the fact that what we have is a government that met itself with an adjustment that it had to do, but that felt politically weak and therefore did half of the adjustment. It did the external adjustment, it cut back on the supply of dollars, it didn't adjust prices. And when it adjusted prices, when it tried to do it, it did it half-heartedly. This is not a new cycle in Venezuelan politics. I mean, we've seen this, we saw this in 88, 89, we saw this in 94 to 96, we saw this in 2001, except that at that moment then there was a political crisis that came after that. So it's actually very new, and I think it all ends in the same exact place. It ends in devaluation. And I would dare contend that given the huge levels of exchange rate misalignment, actually the problem is not even a problem of inconsistency, in my opinion, of the fiscal policy with the exchange rate policy. It's inconsistency of the exchange rate policy with itself. I mean, the fact is that if this country were to have an exchange rate that is at its equilibrium level, and I and others have tried to estimate this equilibrium level, it will get 10 points more of GDP in revenue. So this is a whole deficit problem, is the fact that they've decided to keep an exchange rate which is completely unrealistic. And we've seen governments go through this cycle, and it ends up always in the same place, which is a huge devaluation.
Okay, so when? And no. What, I mean, we talk.
I don't give it a year. I don't give it a year. A year is too much, actually.
Okay.
Yeah, no, I think that we're going to see a sizable devaluation of the average rate at which the government sells to Venezuelans, which is going to increase more rapidly than inflation during this year. Now, this can happen in many different ways. And to get back to your original question, is what's the unsustainability of the exchange rate regime? I don't know. I mean, they've had exchange controls. If the regime is the controls, and they've had this for more than 10 years, nothing to tell me that it's not sustainable. What's unsustainable is the exchange rate. Now, major devaluation, I think that I think that this is like beyond the decisions of Maduro. It's something that they really can't hold on to anymore. It's a system that has become completely inoperative. And I think that what we see now, which is Maduro's defense of the 6.3, is almost the last stand of the system, but I don't really think it's going to last very long.
I want to go on other topics, but I want to focus on this for a second. When you and I spoke, all of us spoke on Friday, one thing you said about it is we want to talk about the political economy of decisions. What will be the political calculations of decision makers to change this course? What will be, I mean, give me a sense of what will be the calculations of Maduro and his economic team to suddenly now to implement that change. When would they do it? Why would they do it? How will they sort of build allies in trying to do it?
Yeah. I think that the choice right now for any rational policymaker that understands the implications of current policies is obvious. In Venezuela, you have to devalue. The government right now is essentially spending the equivalent of $40 billion in maintaining an exchange rate subsidy, which mainly benefits not even its constituents, actually, because in order to benefit from the $3,000 to travel abroad, you have to have a credit card. They won't issue it to you unless you have a credit card. In order to do that, you have to have it to be a reasonably well-off Venezuelan. And I don't think that the government and Maduro is getting many votes from these Venezuelans who take advantage of these $3,000 to travel abroad. I spent a long time with a political scientist who knows Venezuela very well actually yesterday morning. And I was trying to tell him, is there any rational explanation for why the government maintains this huge exchange rate subsidy that doesn't even benefit its constituents, when what it's effectively doing is that it's giving the fiscal rents from devaluation, those $40 billion, it's giving them over to importers. And this political scientist couldn't find an explanation, neither could I, which makes me put it in the bag of policy mistakes. I mean, I think that essentially what's happening here is that Maduro made a policy mistake, and I think it was against the recommendation of a great part of his economic team. And I think that this policy mistake comes from the fact that they don't see, they don't think that there's that much of a problem with printing money. They believe that they underestimate, or maybe we're overestimating, the inflationary effects of printing money. So they think that the printing money issue is something that they can address, and maybe they can take some measures to restrict liquidity. Since I think that this is a policy mistake, I think that as the year goes by, we're going to see inflation accelerate. And as we see inflation accelerate, the error that they've made, that is the error of choosing printing money over devaluation is going to become evident, because no rational or semi-rational or almost irrational government or person would ever pick a hyperinflation over devaluation. I don't think that they've consciously done that, or semi-consciously or unconsciously.
Alejandro, I do want to go back to the issue of the debt, and we can talk about sort of monetizing the debt, about printing money. Give us a sense of sort of what happens if apart from the exchange rate, what happens if they cannot sort of cut? Can they cut fiscal costs? Can they pull back on the reins of public spending, or are they?
They could always cut spending, but probably the first measure that they need to do, and I agree with that with Francisco, is to adjust the exchange rate. Now, if you adjust the exchange rate, you certainly can reduce significantly the deficit. The problem that I see right now is that the government doesn't seem to realize the magnitude of the distortion and the problems that they have in their hands right now. No? So last year, they spent most of the year in an internal debate, trying to see how the new system will work, and then we approached to the local mayors elections, and then it was politically costly to make any decision at that point. Right now that they have all the political capital that they got after winning the major elections, they are not taking any decision. So, and we could be 6 months from now at a point where they lost the political capital that they won in December, and then it will be probably not the best time to take the decision. No? So if you remain in this situation, I think you might not be right now in the border of a crisis or a default, but certainly you are becoming every day more vulnerable. No? If Venezuela at some point faces a decline in oil prices, it could be in a difficult situation. No? And the other issue is that if you don't correct all these imbalances, so the incentive and the trends that we are seeing in the deterioration of the external position of the country will likely continue. No? I disagree in the point that in the last couple of quarters they has been able to stabilize the external asset position. No? When you see it in net terms, actually the net external position has been deteriorating, no? Because they might have stopped the decline of the reserve but it's basically because they are increasing indebtedness. They got the $5 billion loan from China, and they are delaying payments to importers. No? So if at some point they pay what the importers own to the rest of the world, or they face a stop of the loan from China, then the trends continue.
Did you have a comment on that?
Oh yeah, no, I don't think that's right. I think that the evolution of the country's net external position is given by its current account. In the third quarter, the current account improved year on year with respect to the third quarter of last year by $1.9 billion. That's the equivalent of 2% of GDP. That's actually pretty sizable. If you look at it on a seasonally adjusted basis, actually the improvement began in the first quarter. So I think that, all of the data indicates that we have an external adjustment here that's going on. And the external adjustment has been effective, and we've seen it. I mean, that's sort of what we're seeing in Venezuela. They cut imports. There was an 18% decline in imports in the third quarter. And for better or for worse, whether we like it or not, in a country where, for all effects, exports are not dependent on macroeconomic policy, you have to cut imports. Now, normally a government would have done this by a devaluation. They didn't do it by a devaluation. They have a different way of organizing and thinking about society. So this is what Janos Kornai, the economist who studied socialist economies several years ago, called an adjustment by quantities and not an adjustment by prices. That's what they've done in Venezuela. The fact that actually the debts of importers, even the debts of the private sector actually, with the rest of the world, those are also part of the country's net international investment position in the current account. So they're included in that total calculation. I do think that on top of that, it's true that there are arrears that the government has in terms of the payment of dollars of authorizations that were approved by Khedive and that have not yet been paid. Now, that type of authorizations, I think that it's very clear what the history of that is. And the history of that is that at some moment, that's almost why I think that we're talking about an unsustainable effect system, because at some moment the government is going to say, well, yes, I mean, you have these authorizations to buy dollars, you can buy them, but we're not going to give them to you at the exchange rate that you were hoping to get them at. So that and at the exchange rate at which you originally thought that you had them, or at which they had been authorized. Again, this probably won't be the first time that it happens. But nevertheless, to the extent that actually affects the external position both of the government or of the economy as a whole with respect to the world, it's incorporated in the current account statistics, and those show very clearly an improvement, which is actually by the third quarter, it's already quite a major improvement, a sizable one with comparison to the other adjustments or to the typical standard framework within which we would measure external adjustments.
So we all agree devaluation is necessary, almost inevitable, but what's delaying it? And we know what the cost could be in terms of imports, but Aaron, what do you think? I mean, you're looking at the menu of options, it seems to be ways towards devaluation, but what's the holdup?
Well, I mean, there's a couple of different things. I think that the highly overvalued exchange rate creates tremendous arbitrage opportunities for those people who have access to foreign currency. Those people who have access to foreign currency are the people who are in the government or the friends of people who are in the government, and they're getting rich hand over fist. Then in addition to that, there's the fact you have a significant devaluation. It's going to drive up the price of imports, perhaps reduce the quantity of imports. It's going to have a contractionary impact on the economy, and that's certainly something that's always politically unpalatable. When you have a government that's as weak as the Maduro administration certainly was through much of the first year since it took power, that's perhaps a risk that it's not really well positioned to take. Now, perhaps as it continues to solidify its control, it will feel more comfortable undertaking that. But that I think we'll have to wait and see when they come to that point.
What does this mean for, I mean, the current status right now, without the devaluation and then the eventual devaluation, or any sort of policy change for investors that are finding their investments locked in Venezuela. Automotive manufacturers, agribusinesses, American Airlines has billions of dollars they cannot take out of the country. Personally, I think it's just another excuse to impose another charge on us. There's going to be the charge for the carry-on, and then the extra check baggage, and then the charges for peanuts, and then they're also going to impose a Venezuela we can't repatriate our money charge. I think it's just a scam, but that's a different issue, and a large complaint against the American airline industry. What does this all mean for U.S. industries? Alejandro?
So I think we have to analyze it in a case-by-case basis. No? So in general, so most of these companies were in Venezuela, despite all the difficulties, having a relatively good situation. So in general, Venezuelans are very consumers, and these companies were having very large margins, no? So that could have compensated them for all the risk that they were facing, no? But right now, probably the situation has changed a little bit, since they are facing bigger restrictions to bring their inputs or to simply operate their factories in the country, no? So there you will have cases like, for example, the airlines that maybe could reach an agreement with the government. Certainly, when you see the prices of the tickets to go to Venezuela, were crazy. No? So if you compare with the same tickets to go to Bogota or to other neighboring countries, so we were talking about prices that were double or triple. No? So maybe in that case, they might be willing to receive a bonus from the government that cuts by probably half the debt that the government had with them, and they will still be doing a good business, and they will be willing to continue to operate in Venezuela. No? But for other companies that, for example, did not have any access to official dollars, and they had to go to the black market to find the effects to bring the products that they were commercializing in Venezuela, and now they have the constraints that the new fair price law imposed them, it might be much more difficult to remain in the country, and they will have to leave.
Yeah. Aaron, investor.
Well, I think what's the latest news that automobile manufacturing has fallen off the cliff in Venezuela. I mean, it's impossible, I think, in Venezuela to separate the problem of being unable to repatriate your profits and being unable to pay for imports. The two are part and parcel of the same thing, right? And that's part of the problem that the government has, because it doesn't let people take their money out of the country. Then people instead are padding their import bills and trying to get it out on the sly that way. And so this is a well-known problem. But this is what's going to happen is those companies that are, I guess, in strategic or essential industries where the government feels that they need to ensure that these companies continue to operate and provide whatever services or manufacture whatever goods they're involved in manufacturing, are probably going to get preferential access to foreign currency, and they'll be allowed to take some of their profits out of the country, whether it's officially or on the sly, I guess. And those companies that perhaps the government doesn't place such a high priority on whatever it is that they're doing are probably going to have a harder time of it.
I think one of the problems with this exchange rate system, coupled with such an overvalued exchange rate, is that you can't tell apart good imports from bad imports. From the standpoint of the government gets this huge import bill, and part of that import bill is genuine, and part of it is over-invoicing. So how do you see which of it is genuine and which of it is over-invoicing? And talk about the case of the airlines. It's actually quite interesting. Venezuela spent in 2005, $270 million was what Khedive gave to the airlines. Last year, Khedive gave to the airlines, cash actually, $1.2 billion, and they still owe them $3.3 billion. Why is this? Well, First of all, Venezuelans are traveling a lot more because travel is cheap. It's cheap relative to other things in Venezuela, and that's the essence of a real exchange rate being overvalued. Effectively, the price of imported goods relative to everything, including a salary, is very low. So people tend to overuse it. But on top of this, you put the incentive for people to get their $3,000 when they travel abroad, and the government says to them, no, you have to travel abroad. And we got into a level at which it's actually quite ridiculous, in which the Venezuelan government is telling Venezuelans, I'll give you $3,000 if you go and do tourism in the US. But if I'm a Venezuelan who wants to promote domestic tourism in Margarita Island, then you don't get any of it. So of course that means that people are going to try to travel abroad to get that money. You're going to have overuse, and then what we had developed last year is that then people try to come in from other places to book plane tickets that were leaving from Venezuela because they were much cheaper when you had them at the when you valued them at the parallel rate. So all of this implies that that bill has grown tremendously, and then of course the airlines do pricing as anybody in an unregulated industry in Venezuela would do it, which is the price that people are willing to pay. It turns out that the price that people are willing to pay is a lot closer to what the black market rate would indicate, because in essence, people are buying different types of tradable goods, and buying a dollar is not that different from buying a refrigerator. And in the essence, with a dollar, you can buy a refrigerator, and that also extends to airlines. So you have these very costly tickets. You have these kind of $10,000 economy class tickets to Miami, and each of those is part of that $3.3 billion bill. So the system in itself has led to an accumulation of these areas, and then the government that is resisting letting go of the FX control system has been trying to distinguish good imports from bad imports, and that's really essentially an impossible task. And that's why I think that this system is going to implode administratively. By that, I mean it'll probably look very much like a crisis, and I think that in many senses we're going to have an economic crisis in Venezuela. I don't think it's going to be an external crisis, because I think that what's happening here has a lot, is essentially, for all relevant purposes, is something that we can separate, at least in the short to medium term, from the country's external position. But I do think that in the end, this system is just going to be completely impossible to administer. And then I do think that the government will probably go to a set of exchange controls that are going to be limited to what they consider basic industries, and by that I mean more necessities, more food, medicine, some of these things. So they're going to try to limit to maintaining what they can keep control of. The other alternative, the other possibility is that they really go the route of saying, well, let's control everything through the public sector. I mean, let's go the way of Cuba. Let's expropriate everything inside, and let's just kind of run this economy from top down by the public sector. Is that a possibility? I wouldn't discount it, definitely. And many times when you hear Maduro speak, and when you hear some of, at least of the radical group in government speak, you think that that's something that's coming. However, I think it actually takes a lot of energy and a lot of naivete to do that in the way, say, for example, in which the Cubans did it, because the Cubans did this transformation when they took control. Now, what exactly is going to be your idea of the reason why you're expropriating the Toyota plant? Is it to convert it into another Venirauto plant? Venirauto, by the way, is this joint factory which they did with Iran, and basically not producing any cars. I think that there were 296 cars that were produced in Venezuela in January, and 291 of them were from Toyota. I'm not sure if the Venirauto produced the other 5. But
just where you get spare parts, if you
Well, I do think that there is a risk that the real radicals in the government will continue to maintain control and will actually push the route of a total command economy. That to me seems much less probable than actually the government just ending where all of these crises have ended up in the past, which is in devaluation.
Okay, so we've covered the other Ds, default, devaluation, debt. Let's go to the issue of doomsday. If it's a reality or not. I mean, certainly people for a long time have been selling this idea that the bottom's going to fall out in Venezuela any day now, and of course it hasn't happened. So its ability to limp along is clearly demonstrated, and to do it with, as Francisco, you and I were saying earlier, with the government still maintaining surprisingly high levels of popularity and doing well at the ballot box. Let's imagine several scenarios. One is no devaluation. Will just the wheels fall off the wagon then? And if so, how? Let's imagine a devaluation that isn't sufficient. And the other is sort of a devaluation that is sufficient, but obviously there are a whole set of other distortions in the economy that the devaluation may be key to some of them, but it's clearly not a magic bullet. What happens in any of those? Is there a moment? I mean, we're looking at a moment now where basically the bottom falls out in any of those, or are there, and all of them, Venezuela will manage to maybe not just limp along, but actually rise from the ashes?
Venezuela has a lot of distortions, and the policy framework during these past 14 years has definitely not helped. It's worsened things. Now, there's a difference between a low productivity and a low income economy and a macroeconomically unstable economy. Cuba is a low income, low productivity economy. It's a very poor economy, and it's an economy that could be much richer if it had different institutions. But it's not an economy that's going through a hyperinflation or about to go through one. I think that in the case of Venezuela, we have a very concrete macroeconomic distortion, which is generated by this hugely misaligned exchange rate. So I do think that if they do a major devaluation, then actually it's going to be, the level of disequilibrium has gotten so large that it's actually going to be kind of surprisingly effective. Because the fact that this type of black market premium, and again, I would emphasize the largest black market premium that Venezuela had before was during the second Caldera administration, where it got to 92%, and now you're talking about 1,200%. So I think that once you do a major devaluation, if it is really as big as it needs to be, then you can actually stabilize the exchange rate at levels which, whether it's 15, 20, 25, 30, people are going to breathe at that moment. Because that means that the black market is going to come down from 80 or from 120 or 150. If you do a large enough devaluation. If you do the kind of not large enough, kind of the muddling through, then we'll kind of keep on muddling through at very high levels of inflation, probably accelerating, because probably that's going to be kind of not on the side of, it's not even going to be large enough to kind of stabilize levels of inflation. It's probably going to be too accelerating. And that leads us into a scenario of no devaluation. And I think that if they really get it into their heads that they're never going to devalue, if Maduro says it's 6.3 and I don't want to hear anybody else talk about it, and anybody else who tells me that they want another exchange rate is fired, then I think they go to hyperinflation. Then I think the country goes to hyperinflation. And actually, I think that the end is near in the sense that the devaluation, the end is near for the exchange rate regime, in the sense that the effective devaluation is going to come soon. And I actually do think that what we're seeing now has an element of kind of Maduro and some of the radicals resisting devaluation. There's probably another element of, well, let's devalue, but let's say that we're not devaluing because of the political effects. So I think that those two things are mixed. But if they're really serious about not devaluing, and they're really serious about keeping the 6.3 rate for 80% of imports, Venezuelan term deposits actually went down. They were at about 3-4% of all deposits. They went down to 0.27% of all deposits. So basically, over the last year, everybody who had a term deposit took it out. So people are already at the moment at which they get money in the bank and they take it out as soon as possible because they want to put it in fixed assets. That's the moment at which the inflation tax no longer helps you, because the ability of being able to print money and to finance yourself printing money has to do with the fact that there are people that have money in the bank that is going to lose value while you as a government gain the value from that. So that means that you could be at a moment at which you're going to start seeing a huge level of financial disintermediation, that is people trying to get their money out of the banks, put it in fixed assets, and which the government is going to have to print more and more money just to keep going. So you could be relatively close to kind of that inflection point that leads you to devaluation. I think that we're going to see a strong devaluation before that, but if we don't, it would take us there.
Aaron, full devaluation, not enough devaluation, no? Do any of those lead to Venezuela becoming the next success story economically?
I mean, the issue is even if they do a full devaluation that I guess brings the exchange rate back into equilibrium for a time being, unless they address these other imbalances and distortions, they're very soon going to find that the exchange rate is overvalued once again. So, and there's a whole slew of government policies, obviously, a whole slate of them that really need to be modified here. So I don't think that a devaluation in and of itself is going to be enough to address the situation. Now, you talked about doomsday, the doomsday scenario, and we downgraded Venezuela to CAA1 in December, and people interpret that to mean that we think that Venezuela is going to default. The fact is, I don't think that our views are all that different in terms of that. Our probable scenario is that Venezuela will not default. A CAA1 rating means that we think that there's a probability of default of less than 10%. It means 9 chances out of 10 they're going to avoid a default, right? Relative to many other countries, we think that it has a pretty high probability of default, but it's still, if you put it in that context, pretty contained. So I think, though, that there is 10% chance, I don't know roughly, of the scenario that Francisco was just describing, where we see hyperinflation and where things start to fall apart. When I think about Venezuela now, really, what comes to my mind is a story that I read a long time ago when I was young and impressionable by a woman named Ayn Rand. Some people may have heard of her in this audience. And she wrote 2 books. I don't remember which one it was that I read. I didn't even get all the way through it. But it was about this railroad engineer. And basically, because of excessive government intervention, people just pick up and leave. They start to walk away from their jobs, and they take what they can with them as they leave their jobs. And I think that is the direction that Venezuela is potentially headed. We already see these issues with PDVSA, where because of insufficient reinvestment and maintenance, they had the refinery explosion last year. Production levels continue to drop year after year after year, despite the government's pledges that it's going to address those. So you can also have this death by 1,000 cuts, as well as having some kind of grand dramatic explosion.
So everyone leaves Venezuela, is what you're saying?
Oh, I don't know about them, the people leaving, but they pick the carcass apart, basically, right?
Alejandro, different scenarios, what do you think? I mean, is there a moment when this could all come home to roost in a really big way?
Yeah, at the end of the story, the key variable in Venezuela is the same one that Venezuela has in all the story. No? It's oil. No? So if oil prices remain at the level that they are right now, so this situation could last for a while. No? Maybe the government can make some adjustment during this time, and so it can buy more time, and so you could, even with the current distortions, keep the economy working. No? But certainly, if you have a decline in oil prices to a level below 80, the situation for Venezuela starts to be a little bit much more complicated. No? So right now, with the current level of oil prices, the debt service represents around 20 to 25% of the oil export. No? But if the oil prices decline, then so the portion of the revenue that the country receives that will have to use to pay the debt will be much more. No?
Well, last question is the other thing that sort of everyone always talks about as being, a sign that Venezuela is going to collapse is the oil production. Again, this goes back to basically 1998, 99. People have been tracking this and watching it. We're 2.45 million barrels of oil a day production. Can it continue to go lower? Is it? It's the lowest rate of production that Venezuela's had for a very long time. Have they hit bottom, or can they continue to go lower?
seems like it can always go lower, no? And the problem that we are seeing right now in Venezuela is not only that oil production is going down, but also domestic consumption is increasing. No? So part because you have all the smuggling to other countries, but also because you have had a deterioration in the electric system in the country, and then the government has built thermoelectric plants to mitigate the blackout problems that they have been experiencing over the last few years. And these plants are consuming around 70,000 barrels per day. No? So in net terms, when you see last year net oil export of Venezuela could have declined around 200,000 barrels per day. No? So if that trend continue, certainly the country could be in a difficult situation.
So it's not just consumption; it's production for money, for profit, for our currency.
Yes. And I think we can tie that with the point of Francisco about the current account. Although they have restricted imports, this decline in oil production that they have faced during the last few quarters is also affecting the current account and has affected the decline in the external assets. No? So if we exclude the impact of the decline in gold prices, the external assets of Venezuela could have declined last year around $5 billion.
Did you have any last comments here?
Yeah, no, in terms of oil, I think that there's, and I agree with the fact that there's a huge distortion here at the level of consumption, and that Venezuela has underinvested in its oil industry for a very long time. There was an interesting change in 2012 because basically Venezuela was investing around $15 to $18 billion in its oil industry. And those levels were too low. Generally, what most oil industry experts will tell you is that it needs to invest about $25 billion in order to maintain current levels of production, and it needs to invest significantly higher than that in order to get production to increase. In 2012, it actually did invest $25 billion. And I do think that there was an internal discussion in the government because, in fact, what happened was that PDVSA sent $16 billion to Fonden, which was its contribution to Fonden, and then actually went back to the government. Rafael Ramirez went back apparently to Chavez and said, I need some of that money back. And actually, the government Fonden sent $8 billion back to PDVSA. That's how they got it to $25 billion. So apparently, $25 billion is a level that's consistent with maintaining production level stable. The evidence that we have from this year is that they've kept investments similar to last year. But of course, the trend that we've been seeing of decline over time is a trend that reflects past lack of investment decisions, I think, up until this year. On the other hand, then you have this consumption issue, which I agree is a huge distortion. There, I actually do think that the government is serious about raising gasoline prices, and I do think that the increase in gasoline prices is going to significantly cut into this because of that excessive growth in domestic consumption, a large part of it are these contraband exports. There's even a recent Bloomberg story about the fact that in Colombia, drug traffickers have found a way to get around all of the DEA operations to try to identify money laundering. They're no longer using US dollars as a currency. Now they're using Venezuelan gasoline. So obviously, again, this is, I think it's almost part of the same distortion in that Venezuela, you have a government that essentially has the idea that the way in which it carries out good policy is by giving out a lot of things for free. And when they find themselves with a political problem, sometimes their solution is, well, let's increase the price of, let's increase the quantity of these free goods, or let's at least maintain that price very low. So we see this at the level of the exchange rate now, but that's what we've been seeing for a very long time in terms of gasoline and also in terms of electricity, which is sort of the same thing. I mean, they had to build this electricity grid because the price of electricity in Venezuela is also zero. It hasn't been adjusted since Chavez came to power. So in essence, yes, I mean, you can visualize a scenario in which they don't adjust any of these things, and then we end up in the doomsday. Or you can visualize a scenario where they end up adjusting, as pretty much all governments do. The signal that I think that we've seen with respect to gasoline prices is that there does appear to be the intention to increase them, and I think that that's going to be quite a good thing, actually, if they do it. Yeah.
Let's open it up for questions. We have one here, but the microphone's all the way over there, so we'll get over to you. Okay. Your microphone's on your way. It's right there.
My name is Juan Calvo. I'm with the Venezuelan American Chamber of Commerce in Miami. I have a question for the panel. We have been listening very intently about the discussion of devaluing or not devaluing the Bolivar. I think the Bolivar was devalued a year ago from 430 to 630, which was more than 50%, and nothing happened. We have talked not much about changing the system of state control, trying to run by decree even the smallest prices of any arepera. You know, arepa is our staple food, like a piece of bread. What do you think of that? Because I think we're looking at the macro figures, which might mean that Venezuela has enough dollars to go around and, as we say, chug along or tag along for the foreseeable future, paying their bills, even though the scarcity index of in the supermarkets, as put by the central bank in December, is at 22%, which means that the normal housewife will find 1 out of 5 products that she wants to buy that is not available. So what do you think of changing the way things are done from a conceptual point of view from the government?
Do you want to, should we take it seriously? Well, you had your hand up, so why don't you just go ahead and take your question too, and then we'll.
Okay, I'm Fernando Anaya. I'm a student of public policies at Columbia University. And my question, I have 2 questions. First one is, I'm wondering what would be the impacts in inflation if suddenly Venezuelan authorities decide to peg the currency to the creditors? And the second question is to peg the currency to their creditors. Let's say if they peg the Bolivar to, I don't know, the yuan or...
to peg.
Yes, to peg. Yeah. And the second question is, I'm wondering about the drawbacks of suddenly eliminate the exchange control in, let's say, banks' liquidity, like all people just run into the banks to buy the dollars and, you know, do investments around. So in that sense, what policies would you recommend to do, or first of all, do you think it's necessarily to gradually go through to just leave the Bolivar floating, or do you think that it should be a gradual policy implementation that could, you know, leave the market floating? That's basically that.
Any other questions? One right here. I don't know whether the microphone was. Okay. Thanks, Guillermo.
Hi, my name is John DePonson, and my question is more, I guess it would be to Francisco, in terms of you can make a parallel between Venezuela and Argentina, since Argentina has basically devalued very recently, and I think is mainly the cause of the major crisis we have in emerging markets. So is there any parallels in comparison between Argentina and Venezuela?
Okay, we'll take one more because I saw a hand that's up there. Tom, and then one right. No, we'll go back to you, Tom.
Harold Maldonado, USG. Had a question regarding, you guys talked about how Venezuela can manage its economic policy domestically, but I was wondering if you could touch on, if possible, what views do you see Venezuela within Mercosur and any alliances in the region in terms of helping the situation of Venezuela in terms of trade, et cetera. Thank you.
Great. And one last question, then we'll take another round, but we'll go ahead and.
Tom O'Donnell. I teach energy and international affairs at New School and now at Berlin. My question is, I'll ask you the question I often get asked, is how long can this go on? And it doesn't seem to be purely an economic question, because there's the aspect of how long people put up with something. So in some countries, this wouldn't go on very long at all. In Venezuela, it's gone on a very long time. And some of the things that you guys have mentioned, I agree very much sort of with the direction Francisco was talking, but you've talked about arbitrage, over-invoicing, rents, and so forth. And I think Alejandro mentioned that, certain, maybe the bully bourgeoisie, as people say, they talk about people in the government getting advantage from this, but really it seems to be actually quite democratic in the sense that you talk to people in Venezuela from all social classes that participate in some way in this arbitrage. Have their hands somehow on the rent. And yes, if you compare it to another country where there's economic development and the poor people are becoming middle class, maybe that's a better direction to go, as the gentleman said over here. But it's a question of expectations. And what has, as far as what the opposition offers, if there was a different way of doing things, if this system ended and there wasn't this sort of free-for-all, everybody getting involved in arbitrage, what would people have? So it's a question along those lines. It's not exactly formed as a question, but.
Okay, so we have scarcity, different ways of managing the devaluation, parallels between Argentina and Venezuela, a question of domestic implications and how long this can go on. Alejandro, let's start with you and then work our way down.
I think starting by the domestic situation, unfortunately for Venezuela, the situation doesn't seem likely to become better, at least in the short term. No? So far, what we have is that the government, at least in the policies that affect the locals, is signaling that it will continue in the same direction that it has been moving over the last few years. No? So the signal that we have is that they want to increase the control over the import process. The government has been gaining participation and crowding out the private sector in the import process, and this just creates more inefficiencies and corruptions that at the end affect the everyday life of the people in Venezuela. Regarding the exchange system and the possibilities to implement some changes, the truth behind the exchange system is that it has been very inefficient. No? If you see, probably last year the picture is a little bit different. But until 2012, even with the exchange control, we had capital flights for about $20 billion per year since 2003, in average, since 2003 to 2012. No? So the exchange control seems that it didn't stop the capital outflows. Inflation is much higher than what when the control started. So the exchange rate has been moving also, and it's weaker than what it was. So the real effects of the control doesn't seem to be the best. No? So at some point, if there is the willingness for some change, I think Venezuela has the capacity to move towards a more flexible exchange system. So when the control was imposed, I think the situation was radically different than what we have right now. No? The control was imposed in 2003 when Venezuela was in the middle of the oil strike. Practically, Venezuela was not receiving any income because oil production almost went to zero. And oil prices were much lower than what they are right now. No? So now, even if production has been declining over the last couple of years, it's much more higher than what it was during the strike. Oil prices are higher, and certainly there is a confidence problem in the system in Venezuela. But from the macro point of view, you could implement a more flexible system that could certainly deliver much better results than what we have right now.
Aaron.
I'm going to tackle the comparison with Argentina. I think it's an interesting question. We currently have Venezuela one notch below Argentina, which basically means we think they're very good comps for each other. When you consider how far down the rating scale they are, there are not too many countries in that particular space. Now, 3 months ago it was opposite. We had Argentina one notch below Venezuela. That's because we took Venezuela down in the interim. But in terms of the actual problems that they have, you know, they both have balance of payments problems of some sort or another. Francisco argues that Venezuela's balance of payments problems are perhaps overstated, but and I would say that in some respects it's true that Argentina's are worse. Argentina has a current account deficit. Venezuela still has a current account surplus. It was smaller in 2013 than it was the year before, and it was smaller in 2012 than it was the year before that, but it's still in surplus. It means they're bringing more money in than they're sending out, at least when you're looking at imports and exports, basically. Now, the problem in Venezuela, Argentina also faces this, is they have capital account outflows. So that kind of, it doesn't matter really at the end of the day if you have a current account surplus, if on a net basis at the end of the day more dollars are leaving the country than are coming in. But dollars are bleeding, reserves are bleeding faster in Argentina than they are in Venezuela. Another thing that distinguishes Venezuela from Argentina, of course, is that in Venezuela, the government has a lock on the supply of foreign currency. All the dollars that come into the country belong to it. And then it's up to the government to decide how it wants to allocate those dollars, who it wants to give those to, if it wants to prioritize its debt service or if it wants to prioritize something else. In Argentina's case, that's not so. But that's because in Argentina you have a functioning private sector, right? You have a private sector that actually exports and earns foreign currency. That's not the case in Venezuela anymore. PDVSA accounts for somewhere between 95 and 99%, I think, of Venezuela's exports. If you look back a few years ago, PDVSA was always dominant, but not nearly that dominant. I think maybe it was 80% or 75% or something. And the government policies in Venezuela have just really strangled that private sector so that it's not viable, it can't compete any longer. To a certain extent, that's because of the overvaluation of the exchange rate. The other thing is just overall, the distortions in Venezuela are so much greater than they are in Argentina. Both governments pursue a fairly interventionist type of policy mix, but I don't think you can really compare the level of intervention in Argentina with the intervention that we see in Venezuela. And that's why the situation, in our view, in Venezuela has become more combustible. And you see that in terms of the skyrocketing inflation rate. As high as inflation is in Argentina, which nobody quite knows because the government doesn't publish the real figures, and if you say what you think the real figure is, they put you in jail, it's higher in Venezuela, right? Similarly, as overvalued as the official exchange rate may be in Argentina, it's 10 times more overvalued in Venezuela. So,
Francisco.
Sure. Let me start with Juan's question, which I take the point. We've been speaking for quite a long time about the macroeconomics, and part of the reason is that I really think that we have to get the distinction clear. Not every microeconomic distortion becomes a macroeconomic distortion. And not everything that's done wrong at the level of the economy generates inflation. These are two very different phenomena. And you can have a very unproductive economy You can have an economy that's run like Cuba, that's run like North Korea, that's run like many places where nobody wants to think about living, but that are not high inflation economies. So I've been kind of concentrating on trying to understand this inflation phenomenon and how it's linked to macroeconomic variables such as the budget deficit. And frankly, I think that even if you had a government that was very respectful of property rights and a government that did a lot of things right in terms of the microeconomy, and it tried to maintain an exchange rate at 6.3, it would be a disaster. The other day, I think Enrique Capriles said, probably a normal political move, that the government shouldn't have devalued. And I can tell you, I mean, I think that if Enrique Capriles was president, even though I think that he has a great view of how to transform Venezuelan society, he has a lot of good ideas for the private sector, but that type of government, if it tried to maintain the exchange rate at 6.3, it could not do it, and it would go through a balance of payments crisis. So now, there's a lot of things that can be done to improve the economy at the microeconomic level, at the level of resolving those distortions, and some of them we probably haven't discussed that much because I think that we all know what they are. I mean, we all know that it's true. This is a government that's in there setting prices to just about everything without the slightest type of criteria. And to a certain extent, this type of price setting, which has gone to the extreme, it's, the Soviets had to invent Gosplan. And they actually had a very good, sophisticated planning department. And actually, they had people who won Nobel Prizes in economics because of their development of the type of planning mechanisms that you needed to have, the mathematical optimization mechanisms that you needed to have in order to plan an economy. And even the Soviets, even the East Germans couldn't pull it off. And do you think that the Venezuelans are going to be able to pull off a centrally planned economy? No, and therefore you end up with this disaster, which every time that I see it, or it looks like the initial stages of the movie Sorcerer's Apprentice. I don't know how many of you remember that. It's kind of, you try to set everything and you try to control everything, and that's just a disaster because you don't understand all the effects of what you're doing. Regrettably, that's what's happening in Venezuela. If we want to think about the type of reforms that we should do, there are also reforms at the macroeconomic level. I mean, there are things which I think are fundamental in terms of the respect for property rights, in terms of an appropriate definition of the scope of government, in terms of the role of taxation, the role of redistribution in the relationships between the private sector and the state, in which I think we can either reach agreement or we can have an orderly debate. Now, there are a set also of basic macroeconomic institutional issues which have to do with this. What do we do with the exchange rate system? Would it be a good idea to peg it? Can we float the currency? I think pegs are very bad ideas in countries that have such volatile terms of trade like Venezuela, because effectively you need some type of exchange rate adjustment mechanism. If you try to maintain a stable exchange rate with an oil price that can go down very much and it can go up very much, then that means that you're forcing your economy to do all of the adjustment. And Argentina tried to go through one of these adjustments, maintaining a peg, and it collapsed. It basically found itself unable to maintain the convertibility. And I think that that's where you'd fall if you try to maintain a peg with any country. Much more so if you try to do it with countries that are still not your major trading partners. Would it be a good idea to float? There's an interesting debate on this because the problem is that if you float, you have to find a way in which you avoid people taking their money out of Venezuela. Now, you might think, well, if, of course, everybody's going to take their money in Venezuela if the president is Maduro, and of course, people would bring it in if the president was not Maduro, but I don't think it's that simple. I mean, you see some places where they have relatively reasonable people in power, and still, if you have low interest rates, people still take their money out. So you have to raise interest rates, which I think would not be that much of a problem if you really do stabilize the fiscal situation. And I think that you can stabilize the fiscal situation. I mean, maybe some of the difference, say, between Alejandro and I is that I think that most of the fiscal situation comes from the exchange rate distortion. But I do agree that you have to have a very strong commitment by the government not to increase spending after devaluation, and particularly not to increase spending in real terms, in order for this to be effective. And if that is not credible, then people are going to say, well, this government's going to go back to printing money, and therefore you're going to have expectations which are going to make you demand high interest rates, and therefore the only way in which the government's going to be able to control that is by raising interest rates. This actually happened in Venezuela with a country that ran a free market program, and it did everything right, the government, but it couldn't get this part of the adjustment right. And that was the second administration of Carlos Andrés Pérez. And it provoked a recession of a contraction of 8.5% of GDP precisely as a result of this. And then you also have to do something more fundamental, which is that if you're going to raise interest rate, then you better have a financial system that can handle it. So you really need fundamental financial reform. So I think we have to go through those building blocks of fiscal reform and financial reform before we actually float the currency. I think that the differences between Venezuela and Argentina were well handled. I won't touch on that. Mercosur, the countries in our alliance helping. I mean, yeah, the problem is that how can they help us with a problem that is a domestic pricing problem? I mean, if you really thought that it was Venezuela running out of money, which is something that I don't think is the case, then you would say, yeah, I mean, we need more money. We need people to lend us more money, or we need people to lend us more goods. But if you think that the problem, which is what I think is the case, is that Venezuela has set a ridiculously low rate for its dollars, and therefore it's going to have infinite demand for dollars, nobody from outside can fix this. Because if anybody gives you, if they give $100 billion to the central bank of Venezuela and tries to maintain this peg, it's not going to be able to satisfy demand. So this is really a problem of internal adjustment. Nevertheless, I do think that particularly in the context of relative low prices, I do think that Venezuela should think very much about refashioning its alliances or its commitments to other countries, particularly those through which it commits itself to sending subsidized oil. The cost of these agreements is around, depending on how you value it, and the valuation is obscure, but I would value it at approximately around $10 billion a year. The current account adjustment, which happened last year, and I would dispute some of the technical levels, but that's for another discussion. The current account adjustment, which I believe happened last year, is approximately of that dimension of $10 billion. So I think that that shows you that this is actually quite a big drain. And I do think that there are ways in which those programs can be refashioned and restructured to have them make more sense, and to have them make more sense even for both parts. It's actually a case that the idea that Venezuela should give loans, should lend for subsidized oil to other countries was actually an idea of Carlos Andrés Pérez during his first administration. But the problem is with all ideas is that all ideas are good in moderation. But when you're lending 25 years at an interest rate of 1%, and you allow payment back in kind, and you don't even collect on what you're owed, then it becomes a very bad idea. So I do think that there's a lot to do there. How long can this go on? I think that something that there's a political question and there's an economic question. And I think that in the economic question, worst case scenario, which is very, very bad, which is they never devalue, and we went through that. I think that they could end up in a hyperinflation. I think that at the end of that, they'll end up adjusting and devaluing. So it will be in that case, it would be like an exacerbated Venezuelan crisis. But I mean, we've seen more than 100% inflation in the past, and we've seen huge contractions of GDP. We've actually seen higher scarcity levels than currently. In 2007, scarcity index of the central bank reached 25%. So these are all the manifestations of an economy that's very low productivity, and it also has been consistently very mismanaged. And a lot of these things are not new. I mean, Venezuela doesn't have single-digit inflation since the 1980s. Now, the other problem is that this is politically sustainable, and it's politically sustainable for a reason which part of it is not difficult for me to understand. I mean, maybe some part is, but part of it is not difficult. The price of Venezuelan oil reached its lowest level in real terms since we've been measuring it in the second week of December of 1998, when a barrel of Venezuelan oil was selling for $7.6 a barrel. That was the week in which Chavez won the elections. So Chavismo had a huge terms of trade boom, and it took advantage of it politically. And it was able to have much less restrictions on the ways in which it would manage institutions, so that it took advantage of it politically even more than what other governments had been able to do in the past, and even more than what other governments in the region were able to do. But given that, it is actually true that a lot of Venezuelans right now think that they live better under Chavismo, that they have lived better under Chavismo than they did before. And actually, if you look at some of the statistics, that actually happens to be true. And I'm not saying anything good about the government, because I think that Venezuelans should be living much, much, much better at $100 a barrel of oil. Actually, in terms of real per capita exports, the current level of exports of Venezuela per capita in real terms is similar to what we had in the 1970s. And anybody who was around in the 1970s knows what that means. But that's not the comparison that Venezuelans are making. The comparisons that Venezuelans are making is with the level of income that there was when Chavez came into power. Because the story that Chavez was able to construct was the idea that there was this oil wealth that was being taken away by the bourgeoisie, by the oligarchs, and that Chavez came back and returned it to them. So it may be that a really strong economic crisis, macroeconomic crisis, finally dispels that notion in people's minds. That could be the case, or it could be that that notion is sustained for very long. I actually think that we're probably going to have to live with some of that notion for a very long time. For better or for worse, whatever the cause is, there's a real political movement in Venezuela, which is Chavismo, and I think that if any of us thought that there was no Chavismo without Chavez, well, here it is. We're seeing it.
I had promised another round of questions. We're actually almost out of time. Does anyone have a burning question they didn't get a chance to ask? Good. Well, thank you all for coming. Let me say our last issue of America's Quarterly came out today, in fact. So please pick up a copy. Pay, please. And we're going to be having a launch of this on Thursday at lunch with former President Ernesto Zedillo, Thomas Mack McClarty, Bill Clinton's former Chief of Staff, and Anne Marie Slaughter Thursday here at lunch. So thank you all for coming, and enjoy your evening.